Good morning. Welcome to Own Free or Die. I am your host, Zach Jones. It's a beautiful Monday morning here in sunny Florida. I hope it's not too cold. It's a little chilly here by Florida standards. Hopefully it's not too cold where you are. Hope you had a good weekend. Today we are going to talk about the employee retention credit. Probably the first question to ask would be, is it even real? You've probably seen advertisements out there from companies that are offering to help you collect the money that the government owes you. And is it real? Who qualifies? I'll go ahead and give you a spoiler. It is real. Here's an actual check from the United States Treasury that I received for one of my businesses as an employee retention credit. And so we're going to talk about it. So it is real. We're going to talk about who qualifies, how to get it, some restrictions you need to know about. And I'm going to walk you through all of that so you can leave here in just a few minutes having a pretty good handle of what you can expect to possibly receive for your business. And it really can be essentially free money. I know there's no such thing as free, right? That's the government giving out all this money is certainly a big cause for the inflation that we're seeing. But if you're like me, for many, many years, you've seen freeloaders and lazy people that you take advantage of disability and unemployment and all these types of things. So it's kind of nice for there to be a government handout for once for job creators. So it was nice to get a check for once. But anyway, I'm going to walk you through all of that. First, let's take a quick look at some news.
It's called fake news. Fake news. You are fake news. It's all fake news. Fake news. It's phony stuff. It didn't happen. It's all fake news.
I like that little compilation there. We'll talk about Trump another day. Obviously, he's really causing some issues right now among the conservative movement, but we'll talk about that another day. I'm not going to get into a whole lot of news today because I do want to move on to the employee retention credit. The main news takeaway today for me, if you go back to last Tuesday's episode on Election Day, I talked about this, how, the polls were showing, a supposed red wave and that all these conservative candidates were going to do well. But I cautioned that we needed to really temper our expectations because so many of these states haven't done a single thing to change or much less improve how their elections are run. And if it was a mess 2 years ago in 2020, should we be anticipating anything different this go round? And sure enough, here we are. Looks like Republicans are barely going to eke out a majority of the House. So at least we'll have that. The Democrats are going to hold the Senate, may even add a seat. I know that's frustrating, but, look, has fraud occurred in these states? I don't know. I haven't seen any evidence that it has occurred. And I know many of these campaigns have had some pretty well-known lawyers on the ground, like in Maricopa County in Arizona and some of these places. If they've seen anything fraudulent, they definitely, that I'm aware of, haven't gone public with it. So it really just seems to come down to a mobilization of your base and getting ballots into hands. These states, I talked last week how I think voting should have to be done in person. You should have to sacrifice a little bit to show that you really care about the direction of your country, your state, your county, your city, whatever type of election it is. And going to a polling place on election day is a pretty small sacrifice. But the rules have changed. And look, sure, I would love to have the rules changed back where it's not so easy to vote by mail or an absentee ballot or whatever. And we should change or push for those changes. But these places are run by Democrats. They're not going to, if anything, they're going to make it even easier to vote, right? So conservative candidates, I don't really care about the parties. I'm not a party guy. But the Republican Party needs to get their shit together and figure out a game plan on, say, look, the rules have changed. We've got to play the new game. They're still trying to play the old game. And, the Democrats are just mopping the floor with conservatives every single time right now. So, and better candidates in some of these races would help as well. That's my takeaway. And there's probably some parallels to business in there in terms of pivoting and noticing change. And maybe we'll touch on that later in the week. But this morning, this show, I want to get straight to the employee retention credit. Now, I already showed you a check that I've received. It is real. There's a lot of myths out there. We're going to dispel some of those. I'm going to separate fact or fiction from you. So let's start here. And just quick disclaimer, I'm not an accountant. I'm not a CPA. I'm speaking from my firsthand experience of how I was able to obtain the ERC for one of my businesses. That's it. I'm not going to tell you specifically what you should do in terms of tax filings or anything like that. I'm not an accountant. I'm just going to tell you what worked for me, okay? And just wanted to get that out there because I don't want to misspeak and someone try to blame me that they did something wrong or anything like that. So what is the employee retention credit? Well, let's start by going over the IRS's definition. Quote, the employee retention credit under the CARES Act encourages businesses to keep employees on their payroll. A lot like PPP, right? The refundable tax credit is 50% of up to $10,000 in wages paid by an eligible employer whose business has been financially impacted by COVID-19, end quote. So it's a credit of up to 50%, or 50% of up to $10,000 in wages per employee, that's a key statistic there. Now, you could say, Zach, I've seen companies are hounding me with ads. They're saying that it's up to $26,000 per employee. Where are you getting this 10 stuff? Well, you're absolutely right. It has been increased. And the reason I read you this definition is if you go to the IRS website, which I strongly recommend, and review some of their FAQs, the first thing you're going to see is what I just read to you. Now, the ERC has been modified and actually incremented a few times. So what I just read to you is from the initial CARES Act back in the spring of 2020. As you may recall, there have been additional, iterations of the CARES Act, legislative packages, whatever you want to call them. There's been various new legislative actions since then, and several of those increased the scope of the ERC. And actually, the final package actually decreased the scope, dialed it back just a smidge. We'll talk about that in a moment. So when you go to the IRS website, the first thing you're going to see is information for that initial CARES Act package. And then what they've done, instead of aggregating all of the information into a single section, they've separated it. So you have to go to different pages for each iteration of the ERC. So it's a little confusing. That's just the way that they chose to do it. But anyway, so the 10,000 number, as I said, is from that initial package, and what it included were wages paid from March 12th, 2020 through the end of 2020. That's the window that was covered with that first iteration. But if you look at in aggregate all the different packages, the current eligibility window of wages that you've paid is March 12th, 2020 through Q3 of 2021. And at one point, Q4 of last year was included as well, but that was eventually nixed by Biden's package. So the gist of all this is that you essentially get a credit for wages that you've paid to employees. Now, it's a credit, not a deduction. And if you're a deduction, just let me quickly go over the difference, because I hear people use these words interchangeably sometimes, and they are not the same thing by any means. A credit is much better for you, much better than a deduction. A deduction is, you had $100,000 in gross receipts, you spent $10,000 on rent, so you deduct that rent expense from your receipts when calculating the income tax you owe. A credit is, it's money. It's a credit, it's a check from the government. Now, if you owe a tax, the credit can be deducted against that, right? But if you have, in this case, we're not talking about income tax, we're talking about, it's your 941, your employee taxes. We'll get to this in a second. It's an absolute credit. So you've already paid, hopefully, you've already paid your 941s from 2020 and 21, and the government, as a part of this legislation, has decided that you have a credit, and since you've already paid it, they're going to send you a check back. Now, if you never filed those taxes, If you never filed your Form 941, then obviously you're not going to get a credit. They're just going to say that you don't owe it. You don't owe for those. And the 941 is the quarterly federal tax return, if you're not familiar with that form. So that's the difference between a credit and a deduction. Very big difference. So hopefully all of you have already paid your taxes from those quarters, which means if you're eligible for this credit, you're going to get an actual check, potentially multiple checks. We're going to help you figure that out here in just a second. So that's what it is. That's what a credit is. And the max you could potentially qualify for across all quarters per employee, $26,000. Okay. So depending on how many employees you have, you're probably already doing the math in your head. This has been a lot of money for a lot of people. And if you look around, I know a lot of people in 2020 were getting their stimulus checks of $1,000. But if you look at the past couple of years and you look at how the demand for private jet travel has skyrocketed and how the luxury watch market has skyrocketed and second home demand has skyrocketed, a lot of this demand is coming from some of these COVID financial actions our government took. The PPP loans, these ERC funds, idle loans. There's a lot of money has been doled out the past couple of years. And, if you've been looking at someone that and you're wondering how they've afforded a bunch of stuff, they may have been pretty slick at claiming their ERCs and the PPP and all that. Now, who qualifies for the employee retention credit? Now, there are some very important qualifications. I'll be very clear. Not everyone's going to qualify. But here is the verbiage from the IRS, and this may just be verbatim from the CARES Act, I'm not sure. But this is the verbiage that the IRS is using to determine who and who is not eligible. Quote, if you're fully or partially, or did you fully or partially suspend operation during any calendar quarter in 2020 due to orders from an appropriate governmental authority limiting commerce, travel, or group meetings due to COVID-19, or experience a significant decline in gross receipts during the calendar quarter, end quote. Now notice it says 2020. Again, that's the initial verbiage. Expand that window through Q3 of 2021. So were you forced to suspend operations by a governmental body, could be federal, state, local, or did you experience a significant decline in gross receipts? Not both, either one of those two. If you can say yes to one of those two, then you sort of meet the first step of qualification. Now, notice it says gross receipts, not profit, which I think is helpful. Gross receipts, quick refresher, that's also known as gross revenue. That's the term I typically use. IRS is using gross receipts here. That's your top line number, right? If you sell a $50,000 project, if you're a construction company and you sell a $50,000 project, even though only 10% of that may be profit, your top line gross receipts were the $50,000. Okay, that's the number that we're using here. And they talk about a significant decline. That's the phrase they use. What does that mean? Do they define that? They do. They give a very specific way to determine if you meet that significant decline threshold. If it's a 50% or more decline. So what you do is you pick a quarter in 2019, pre-COVID, let's say third quarter 2019. If in third quarter 2020, you experienced a decline in gross receipts of 50% or more, you qualify. And you can do it for multiple quarters, potentially. We'll talk about that. Now, there are some other inclusions, like you can also include qualified health plan expenses. I'm not going to get into that here in this show because so many businesses have so many different ways of determining how their benefits are structured. It'd be very difficult for me to cover that in a way that'd be relevant to everyone. But the main thing is the wages. And, again, just another disclaimer here. I'm not a CPA. I'm only speaking from my experience and how I've interpreted their information. And, obviously I did something correct. But the additional requirement beyond your decline in gross receipts is PPP. the Paycheck Protection Program. A common question that's asked is, can you get an ERC credit if you also got PPP? Yes and no. And it's a complicated answer. And I hate giving complicated answers, but I'm going to walk you through, okay, what the correct answer to that question is. Because again, a lot of these companies out there, they're advertising, they're going to help you get and claim your ERC. They are just blindly saying, yes, if you got PPP, you can get this. And I wonder how diligent they're actually being. So I'm giving you the truth. I'm not sugarcoating it. I'm not selling a service here. I've got nothing to gain. Whether it doesn't matter to me whether you claim this or not. I hope you claim it if you're entitled to it, because it's very easy money. But I'm giving you the information as I understand it. So here, if you got PPP, that doesn't automatically discount you from getting an ERC, but you can't double dip. So if you have already applied for and received PPP forgiveness, which I don't even know if you still can anymore. I'm not sure if we've passed a deadline on that or not, because it's been so long. I know I did it a long time ago, but if you applied for and got PPP forgiveness, and you used wages as part of that forgiveness calculation, wages that you used for forgiveness, you cannot claim those same wages for the ERC credit. You can't double dip on wages, okay? Now, you may recall that wages were not the only expense that you could use PPP funds on to gain forgiveness. You could also use rent, I believe utilities, and there may have been a few other things in there as well. But it wasn't just wages. So if you've already gotten forgiveness, then you can't double dip on those funds. Now, if there are other quarters or other wages paid during periods where you still had that 50% or more decline, you can use those, okay, but you can't double dip. Now, if you haven't filed for forgiveness yet, and again, I'm not even certain if you still can, but if you haven't, you've got some strategic decisions to make. So, you would need to determine which quarters would be most advantageous to use for PPP forgiveness, and depending on what your loan is, and then you would need to determine which loans or which quarters would be most advantageous to use for claiming your ERC, okay? Ideally, you would want, since the PPP is more flexible, right? You're not limited to just using wages to claim that forgiveness. You can use rent, utilities, potentially some other things. It's been a couple of years. I can't remember, forgive me. But, since you've got more flexibility with the PPP, you could use periods with lower wages paid to get your PPP forgiveness. And then the periods in which you had higher wages paid, use that for your ERC. So that way you could be strategic and maximize the return that you receive from these programs. And there's nothing wrong with that, right? These programs are here. You owe it to yourself and your business to maximize what you can get out of them. And I'll go ahead and say this, because I've seen some stuff online. I know the temptation is there to double dip. I've seen people say, well, is the IRS really going to check every single filer and see if they used exact separate wages paid for the PPP versus ERC? Are they really going to check that? Look, I don't know if they are or not, but I know what the law states. I know what the rules state. It is not worth it. That's the type of thing, if you ever get caught doing that, not only are they going to bust you on that, but I would imagine that's going to result in an absolute, incredibly thorough audit of probably multiple years of the books of your company. So I just don't see the risk-reward ratio making sense on that. So I would strongly discourage you to not do that. But, you're a grown-up. You can do what you want. Now, as I mentioned, the main reason I'm discussing this is there are a ton of companies out there. I've seen ads. If you don't believe me, just go do a Google search for ERC, and you're going to see a ton of ads come up from people. I don't even know who these companies are. They've kind of sprung up in the last few months, and they're going to offer to help you claim your ERC. And the way they're structuring this, it's kind of like a personal injury attorney. They're saying, well, there's no fee unless we win, and then we're just going to take a percentage of whatever you're able to claim. Well, I gave you some expectations a moment ago of what you could potentially expect to earn, and I'm sure you guys have probably already been doing some rough math in your heads. These companies that I've seen that I've priced are charging 25% for their services. So it's very conceivable that a lot of you listening to this could get 6 figures in ERC credits. Okay, I know multiple businesses that have done that. And you're going to pay this company or one of these companies 25% to do the work for you. That's a hefty, you're paying 25 grand or more for them to do this for you. And I'm about to show you, you don't need them. Okay, I don't know who these companies are. They may be great, reputable, honest, helpful. I don't know. But I don't want to see you piss your money away on something that you can pretty easily do yourself. So how do you get the ERC? This is the main reason I made this episode today, or why we're talking about this. You can do this yourself, okay? If you have a bookkeeper that you use, they can help you with this or do it for you, or if you have a full-time account that you use, whatever. If you don't, you can still do it yourself if you're at all comfortable, with tax forms. And by the way, if you're not comfortable with tax forms and filing taxes, I would encourage you to, the end of the year is coming up. I would encourage you to do your own taxes for your business, for the coming tax period. I know that may sound crazy. Years ago, I had a great accountant, and I still work with him on some things. It was nothing against him. But I just felt like I didn't have a good enough understanding of money and taxes and how it all linked together. So I decided to do my own taxes. In that first year, it wasn't as bad or as hard as I feared it would be. And since then, I've continued to do it myself for all my companies. And people think I'm crazy and that I'm just pissing time away and I should pay someone. Well, now that I've done it a few times, I own multiple LLCs, and obviously I also have my personal taxes. I can sit down in about half a day to a day and do all of it. And I know some of you may not can afford to give up that much time. I get it. I'm not saying you shouldn't hire someone, but at least for 1 or 2 years, do it yourself. And I promise you, you're going to have so much better of an understanding about how income taxes work, employer taxes work, how it all connects together, how deductions work. I think it will be very beneficial for you. So if you're at all comfortable with these forms, or if you've ever spent time looking at tax forms, this is really going to be easy for you. If you haven't, I promise you, you can still do it. It's not that hard. Now, I did my ERC claims entirely on my own, and it appears that I did it the right way. And again, just a disclaimer though, I'm just going to touch on what I did. I'm not telling you what you should do or how you should do it. I'm going to tell you what I did. And if that's helpful to you, then great. But if you have questions, I would go to the IRS website. I would read the instructions for the form we're about to touch on. That's the main thing I did. Every tax form the IRS puts out, they have a corresponding PDF of instructions on how to use it. Read those. They will give you the answers you need. If you still have questions, talk to your bookkeeper or CPA. They can help you. But I really don't think you need to go pay some company 25%, okay? So here's what I did. I started by analyzing my revenue from 2019 through third quarter of 2021. So I got in QuickBooks and I ran reports, and I did it quarterly, and I just ran a basic P&L for each quarter, 2019 through Q3 of 2021. Now your 2019 numbers are going to be your baseline, right? If you're using the significant decline in gross receipts as your qualification for the ERC, then you're going to use that 2019 number as your baseline. So for March 12th through the end of 2020, and then the first 3 quarters of 2021, for each of those quarters, you're going to run a P&L, and then you're going to compare that to the corresponding quarter in 2019. So let's say, for example, in Q3 of 2019, you did $100,000 gross receipts, just using easy numbers. In 2020 and 21, you would have to have 50,000 or less, a reduction of 50% of gross receipts in those quarters to qualify. Okay, so compare those quarters to 2019 and determine which of those you qualify on based on gross receipts. Using 2019 as the baseline. If you don't have any quarters with a reduction of 50% or more, then you don't qualify, at least not based on gross receipts. So I hate to be the bearer of bad news, but That's the first qualifier. The second qualifier, if you've identified a few quarters or a quarter where you had that decline, then let's proceed to step 2. I then compared to my PPP forgiveness, and if you've used those funds for the quarter that you initially qualified for, if you used wages in that quarter on your PPP forgiveness paperwork, then you have to subtract those. You can still use that quarter as an ERC, is my understanding, but you have to deduct the wages that you used for PPP forgiveness from what is eligible for the ERC. So now you've got to make those comparisons. And again, if you haven't gotten PPP forgiveness, you've got some strategic decisions to make. And if you don't plan on filing for PPP forgiveness, then all those periods, all those wages would qualify for ERC. So just depends on what your unique situation is. Now, once you've determined which quarters you had the gross decline or the significant decline of gross receipts, and which of those are eligible after your PPP forgiveness, if you have any quarters or periods left, you're in really great shape. You're probably going to qualify based on my understanding. So for those periods, you need to retrieve your 941s. Again, your 941 is your quarterly federal tax return, your employer's quarterly federal tax return. So you need to pull out your 941s from those periods. I use Gusto, so those are prepared for me automatically. I can log in, and I was able to retrieve those in just a minute or two. And if you use any other online service like ADP or QuickBooks Payroll or whatever, those 941s should be pretty easy for you to obtain. If you use a bookkeeper, you're going to need to get with them, and they should have those for you. And for each of these quarters that you qualify for, I prepared a 941X. Again, one form per quarter. If you qualify multiple quarters, there's a 941X for each of those quarters. You cannot use one form for everything unless you're only filing for one quarter. The 941X, it's a long-standing form. It's not new to the ERC, although it has been modified, as you'll see in a moment once you look at it. It is the adjusted employer's quarterly federal tax return. So this is the form you use when you want to make a change or adjustment to a previously filed 941. Well, that's exactly what we want to do, right? We've already paid and filed a 941, and now we want to take advantage of the employee retention credit, so we need to revise our 941. That's the process that the IRS has set up for claiming this credit. So for each quarter, you're going to complete and file a 941X. It's a pretty straightforward form. I strongly recommend you read the instructions that accompany it. They're on the IRS website. Just search for 941X instructions. And again, this is not tax advice. I'm just telling you what I did. Beyond the employer information, there were only a few lines that I completed. If the line did not pertain to the ERC, I just left it blank, because that means that information will be unchanged from the initial 941 that was filed on behalf of my company. So the lines that I edited were under Part 1, line number 2, checking that it is a claim. Part 2, number 3, 5D is what the box I checked there. Under Part 3, lines 18, 26, and 30 need to have information entered. And again, the instructions will walk you through what values need to go there. Then under Part 4, Part 4 is sort of the open, I guess it's line 43. It has space for an explanation. I wrote, "We are filing this amendment to Form 941 in order to account for the employee retention credit. Our gross receipts for Q3 2019, in this case, whatever quarter you're using, our gross receipts for Q3 2019 were X dollars. For Q3 2020, or 21, whichever you're filing, our gross receipts were Y dollars, a deduction of Z%. So I just went ahead and laid it out right there in clear terms, why we're filing this 941X and why we're entitled to the ERC. Now, obviously, they can calculate that for themselves. I think it's just helpful that whatever employee at the IRS is reviewing this, they can clearly see why you filed this 941X, because I'm sure they're doing a ton of these, and it helps them process it probably more easily and more quickly. That way they're not having to look through every single line of your 941X and trying to figure out what's going on. You're being crystal clear here. Hey, I'm filing this 941X for the ERC. Here's why I feel I qualify. Bam. It makes their job easier. Anytime you can make the IRS's job easier, it should be a good thing for you. And that's it. So I entered the information on those lines, and I was able to fax it. You can, in the instructions, there's a fax number. You don't even have to mail it. So they get it. And that's that. So getting your check, getting your credit, what does that process look like? Now, it took me, I believe, a little over 6 months. And from people I spoke to, that was a pretty common number. Now, this was last year. That seemed to be about the average. I have no idea. I have no way of knowing directly what the average wait time is now. I wouldn't be surprised if it's a tad shorter, but I also wouldn't be surprised if it's longer. It's government. So, but this is not something you're going to file and get an instant credit. Now, what I would do and what I did is I waited, a couple or 3 months after I filed. And I knew when I filed it was going to take some time. I wasn't expecting it to be instant. But I called just to check on the status. And, I don't think there's anything you can do to speed it up. But I at least was able to confirm that it had been received and that it was in their system and in line, so to speak, to be processed. That way, I'm not just sitting there waiting on something that's never going to happen if they didn't get my fax for whatever reason. So I would recommend you do that. But I probably wouldn't recommend calling and driving them nuts because I don't think there's anything you can do. But eventually, once they process your 941X, and if you qualified and you properly filed and all that, you're going to receive an envelope with a check just like this. In terms of what to look for, it's a very basic white envelope with a clear plastic window where you can see sort of the top of the Statue of Liberty. I don't have a picture of the envelope, but you'll see it's from the U.S. Treasury. You can tell from the coloring. There's no doubt it's a check when you see this in your mail pile, okay? There's no mystery. And that's that. It's a check, and you deposit it, hopefully. And that's that. And, when I said hopefully, I was sort of thinking back to an episode last week where I talked about sort of the upcoming recession and economic climate and how you need to be hoarding as much cash as you can. Well, this is a great way to strengthen your cash stockpile, okay? If you qualify for the ERC, get it as quick as you can. Throw it in the bank and save it for a rainy day or for a potential opportunity that may come along as a result of the recession. So that's it. That's, anytime we talk taxes, I know it can be intimidating, it can sound confusing, but this is really pretty straightforward. Qualification is fairly straightforward. If you qualify, it really is free money, at least, not thinking about the government's debt portion of this equation. If you don't think about the debt and inflation, it really is free money. And there's really no reason for you to not claim this for your business if you qualify. So if you have questions, ask them in the comments. Depending on how specific they are, I may or may not be able to answer them. Again, I don't really want to get into the business of giving personalized tax advice. I'm not qualified to do that. That's what CPAs are for. But again, this whole video is about the process that I followed, how I interpreted the regulations and the processes in place. And just to let you know that it is real. It did work for me. And if you qualify, I hope you're able to do this and that it works for you and that you get the money quickly, perhaps, and hopefully much quicker than 6 months. But hope you found this helpful. Let me know in the comments. Be sure to like this video. That really helps us. We're a young channel. Anything you can do in terms of liking, subscribing, sharing with other business owners will be very much appreciated to help us increase our subscriber base and help this show get off the ground. The more people that like it and subscribe the YouTube algorithm is going to recommend it to more people. So it really does have a direct impact. Tomorrow, I just mentioned the economy. We're going to talk about the economy, but specifically, what are some ways that you should or should not be leveraging your money from your current business for investing? I talk a lot about the importance of taking the money you're making today from the business you own and being smart with it to invest it, leverage it, make even more money off of that money. So how should you be viewing that scenario, investments and whatnot, in light of sort of a worsening economic climate? Well, that's what we're going to talk about. So I hope you'll tune in tomorrow. Thanks again for watching, and I will see you then. Have a good day.